right, mate. Can you give a look at near daily stop hunt? Trying to flip green, also 2 week. Trying to flip green. What it mean is trying to grind higher in the apex. Let's start off. We'll look at the 2 week first. Yeah, I like this. Yeah, I do like it. At least for a move up and to take liquidity in the wick. It could be a reversal and it could go a lot more. It's tough to say. It's tough to say yet. This is it's still red on the month, but it took liquidity below in this candle off the double bottom stop hunt, so it's a bullish stop hunt. So technically overall it is still bullish above this green line. If it is any upside at all, it's going to start flipping green on the month, and if it actually does flip green on the month, well, you're going to start to see some upside, and maybe because there's 23 days left, there might be the possibility here that this could flip into a bullish monthly engulfing candle, a little bit like what happened. Well, it's a bad example. I mean, here's bullish engulfing monthly, but it does open the door for it. It definitely does. If this market can hold up, it opens the door, and this is still a 9. There's 6 days left, right? This is still a bearish 9 week candle. It is trying to pop up and create a wick in this 9 week candle. So, like, obviously, if I just zoom out here, you can see that all the best moves are on 9 week candles that flip green, right? In this chart, it'll be the same on monthly candles and all. But as far as a 9 week here, like, buying here, it didn't really mean much, right? But if you bought when it flipped green here, especially after a bullish stop hunt, well, you done very well. And same here. But if you're buying, like if you bought down here, I suppose you done okay, because this popped up into the end of the 9 week, and then it got continuation. But if you still bought on a new 9 week, you still done all right. You still done pretty well. You didn't get the exact bottom, but you done pretty good. And that's kind of the situation we're in right now. Technically, I would normally say that this is a bear flag, right? And this wants to break down, right? That's what I would normally say there. This looks like a bear flag that wants to break down. The problem is that it failed, right? It did fail. So it doesn't mean that it can't break down further in the future. The new 9 week candle could open up and have another red candle back down. If I can just change that to red, so there's no confusion. It definitely could do this, right? But at this point, above a bullish 9 week stop hunt, which is a bullish monthly stop hunt, this is considered slightly bullish, yes. So it's going to be very important in 6 days time to trade a new 9 week candle. If we are red on that 9 week candle, well, we need to be very, very careful. We do need to be very careful. So in the meantime, the markets are looking to try and bounce into the end of this 9 week candle, into the end of the candles, like here, for example. Maybe even here a little bit, you got a bit of a bounce up, and then it continued up. You can see the way it continued. If you had managed to knife catch the lows, it still went higher. That's the situation we're in. It's not an ideal situation. If we break below the green line, you do not want to be in this trade at this point. As long as we are above here, you could attempt to trade this 2 week candle and see if this can pop up. If this can pop up, it'll create that extra wick in that 9 week candle. Buying now is slightly aggressive, but you can see that we've already had the dip down, right? We've already dipped down, kind of took liquidity below, and it's popping up trying to flip green. You mentioned that we had a bullish daily stop hunt. It's not quite a bullish daily stop hunt, but it opens the door, right, for something like this, right? It opens the door for this to be a bullish move back up. I would probably say that tomorrow is better. It might flip green today. I don't think so, but it might. I would say tomorrow, if there's any dip down into this previous wick here tomorrow, I would say that's your safest buy, right? So if there's any wick kind of down tomorrow in here at all, and then that could be your buy with a stop below today's low, right? your stop loss would go there. If you want to have it very tight, your stop loss would go here below this candle right here, and you look to buy here in this green box, and then you want it to pop up and flip green and bounce back up. That's to me the safest way to trade this. That would mean it would flip green on a 2 week, and then that would also mean that there's a higher chance that then this is going to push higher into this moving average.